You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Welcome back, everybody. How are you going over there, Hamish? You've had an eventful week, I hear.
There's always something going on. I had a crazy week, man. So where do I begin? This is a bit of a story. So probably mid last week, I started hearing this scratching in the wall. And I didn't really think too much of it. I just thought, you know what, if there's a possum that's gotten into the roof or something, like I'll deal with it next week. I'm too busy this week. And then on Friday, I was just watching the footy with a buddy of mine, and the scratching gets really, really loud. And we're like, what the hell is this? And then all of a sudden, we just see a little bit of plaster like crack at the roof, and this little hole appears, and a wasp just comes out of it. And we both just looked at each other like, oh, what the hell? And then another wasp, and then another wasp, and then another wasp. My living room was just filled with wasps. You can just imagine me just running around with this can of spray, just trying to defend myself. Oh my God. It was seriously, if you've seen it, because I'm a big Black Mirror fan. Have you seen any of Black Mirror? Have you seen that? There's an episode where they have these like bionic bees. And they
I've only seen like one or two episodes, I think. Well, it's been one of those shows I've been meaning to watch, but no, I haven't got around to it.
Yeah, well, recommendation, I think it's called Hated in the Nation is the episode on Black Mirror, and these bionic bees attack and pour into this house and kill this person. It felt like that, very much like that. So
wow. So you actually had like this full-on wasp nest in your wall.
Yeah, so what we had to do, we had to put some cardboard just to patch the hole because they were obviously just coming in. And then even days after, you could hear them scratching and trying to get through the cardboard. So they were just continuing, relentless. Eventually, I got someone out to bomb it or whatever, and he said that there's a nest in there that's the size of a basketball.
Holy smokes.
So there's probably thousands of these wasps, and he said we were very lucky that the hole didn't, because there was only a little hole, but probably they ate a large part of the plaster. So we're lucky it didn't completely cave, because we would have definitely been swarmed.
Wow.
So
holy moly.
Yeah.
So what do? Do they just come in and exterminate them, or do they try and like relocate? Is it one of those things? Because I know with bees you're supposed to relocate
I think they
probably not with wasps.
I don't think with wasps. Yeah, I think they do try and do that with bees, but with the wasps, so they just bombed it. So they put something in there that just killed them all, but the nest is still in there. They have to remove it. They got to redo the plaster.
Oh, right. But you're safe.
Yeah. I believe so, unless they're getting reinforcements, unless they're plotting behind the...
New wasps are coming in going, oh, look, an empty nest. This is good. Oh, nice, spacious, 10 bedroom, 8 bathroom. Oh, I like this.
I'm just so glad that they didn't break through while I was sleeping, because it was about 9 p.m. at night. So a couple hours later, I could have been just sleeping and woken up to a hive literally inside my house. Oh God!
Wow.
That noise triggers me.
What a story!
Yeah,
what a story!
It doesn't happen.
And
too
that was
often.
for those that don't follow me on Instagram, I was in Melbourne for the weekend, and I was going to stay with you on Monday, and that was so funny when you just sent me the message like, mate,
yeah, by the way,
I don't know if you're going to be able to stay here, and then you just sent me this picture of this wasp coming through the wall. Holy smokes!
Yeah.
But anyway. The Grand Prix was good.
Yeah, how was it?
I'm sorry that you had a terrible time over that weekend, but I had a great time on the flip side.
Yeah, it looked like there was a lot of people there. It was crazy.
There was a lot of people. I think it was like the highest sporting attendance for a single event in Australian history.
Wow.
Because I'm thinking, what sport? I mean, the MCG is our largest sporting venue, so that's a capacity of 100,000. So I guess this had the Grand Prix race was attended by 128,000 people. So
wow,
that was a lot.
That's insane.
That was a lot.
Yeah. It looked good. I of course watched it on TV, and it was very interesting. There was a bit of action. It
was a bit. Yeah.
Wasn't uneventful, but it also wasn't. There wasn't really any contest at the front of the race, really.
Yeah. Charles Leclerc dominated.
At Ferrari, it's looking good. It's looking
It was
solid.
interesting, actually, because it's the first time I've ever been to Formula One, actually seeing them go past you at the same spot of the track every single. Because, the TV, it cuts to different parts of the grid and whatever. But it was interesting actually watching them go past each and every lap. So you do get a sense for like who's breaking away, because you get like, Charles Leclerc, he's definitely a little bit further ahead this lap than he was last time. So it's actually interesting to put into that context. But he was consistently faster. But man, what an event. It really like made me think, because I'm always thinking about like economics and stuff like that. I was thinking like how much logistics there is to like put on an event like this. Like they have to shut public roads, they have to resurface the whole track. They got to think about safety, capacity, security. They got to think about food, water, medical, this, that. Just, oh my gosh, what an event to organize. That would have been huge. But they would have made a lot of money. I think like one of the cheapest tickets was like for 4 days, you pay like 180 or $200 or something like that. And there's 128,000. Overall, there was like 420,000 attendees across the 4 days.
Wow.
They would have made bank. And then you think about all the food stalls. Like I had to leave a line because I was going to miss qualifying because there was so many. Like if I'd say I was probably in a line that would have taken at least an hour and a half to get to the front of. Like it was just constant food. And the merch, oh my gosh.
Yeah.
If you guys don't know Formula One, the merch, like you think about buying a merch for a YouTuber or a merch even for like one of your AFL teams, you're like, I'll probably pay like $50-$80 or something like that for a t-shirt or something like that. No, Formula One, $130 for a baseline t-shirt. If you want to get one of the flashier polos or something, you'd be paying like towards $200.
Wow. Yeah. Yeah. Yeah, there's a lot of money in it. The food, the merch, the alcohol, the betting. There's just probably money from definitely a lot of money from sponsors and people with stalls set up and marquees. Oh, wow. Yeah, it just, it is a spectacle. I would have loved to have been there, but hopefully I'll get around to going to another one.
Yeah, well, I'm definitely going to go next year, so I'll have to go along next year.
Yeah. Did you see the new Vegas track that they're going to run next year? Yeah, sweet. Yeah, that looks insane.
Maybe forget Melbourne. Let's just go to Vegas.
Yeah. Okay. Yeah. Let's do that.
I'd actually be down to do that. That sounds like so much fun.
Yeah. Yeah. Anyway, let's get back into some investing and finance news. We've actually got quite a few interesting things that happen with some high profile investors and business owners. We've got some more Musk news, a bit of a follow-up from last week, or a big follow-up, I should say, from last week. We've got some news out of Charlie Munger, more Berkshire Hathaway news, inflation, favorite time of the month. Inflation numbers are out. So we've got a lot to talk about. We've got a bunch of things. So let's just get straight into it. Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically or you can do it one by one or using Excel. And it will track all of the different types of gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, regardless of how it's structured, it will do those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. Super important. Most people don't track currency, so being able to see that accurately in your portfolio is a lifesaver. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, as well as used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site spelled SIGHT, sharesight.com/young investors. So use that link, sign up to a free plan, track up to 10 holdings for as long as you want, or use that link to get a premium plan for more features, and you'll get 4 months off a yearly subscription if you use that link. So go check it out if you're interested, and thanks everyone who has used that link to support the podcast.
All right, we have to talk about inflation first.
Okay.
It's the same story. I know we say it all the time and we talk about inflation all the time, but this is honestly, actually, I tell you what, we probably say this every single month now, where I'm saying, honestly, this is just ridiculous.
This is the one.
I think I said that last month. I probably said that the month before. Probably said it when inflation was 5%, then it was 6%, then it was 7%, Then it was what's the most it was 7.9% annual inflation rate in the US, wasn't it? I think.
I believe that's what last month was. Yeah, it was under 8. That's right. It was just under 8%. It was the 7.9999999. So they couldn't hide.
Now we're hitting. Are we copping the petrol? Are we copping the fuel inflation now?
Yeah, they couldn't hide anymore underneath 8%. So it hit in the US 8.5%, which is the highest rate since 1981. So the good news is, because the inflation in the 70s was so astronomical, we're no longer, pushing, we're not going to be into the highest since 1975. We're not going to be there yet. We're protected at the border of the 80s here.
It's kind of funny that the last 3 months, the headline has been the same, but the number's been changing.
Yeah.
It's like it's 6%, the highest in 40 years.
Yeah.
7%, the highest in 40 years.
Yeah. Yeah, exactly. Highest since 83. Highest since May 82.
Exactly.
But so 8.5%. Honestly, it was actually less than what was expected at the start of the month. Remember last time we spoke about this, the expectation based on the oil shock was that it was going to be above 9%, maybe even double digits. So that didn't happen, which is a relief. But
it's a positive.
It's a small positive among while we're drowning in inflation. But in terms of the month-over-month increase, it was obviously insane. The consumer price index, which is what we're tracking here, rose 1.2% in March, which was the fastest month-over-month increase in the past 12 months. So insanely quick. I think the month before that was 0.9 or 0.8%. So we're still accelerating this month. And for the first 3 months of this year so far, inflation is 2.6%. And if you remember, the Federal Reserve's current prediction for inflation in 2022 is 2.4%. So they're wrong by 9 months. But good work. Good job, guys.
Nice guess.
Great prediction. You were almost there. Are they going to come out and say, actually, we meant 2.4 for the first quarter of the year. We didn't mean for the whole year.
They got The press release will be like, we have to update this stat because we made a typo. Sorry, guys.
Yeah,
we meant quarter, not year.
We actually meant 24% for the year.
Yeah.
But
oh man, that is just huge.
Yeah,
and I think I'm trying to remember when the petrol prices went sky high. Was it just in March, or was it? Yeah, well, I guess this is for March, isn't it?
It was already rising in just based on
February,
just based on the conflict. It was already rising in February, but the shock that happened where prices went up like 50%, 30% in a lot of places, that was all in March. So
and now, of course, we're in April. Yeah, so.
Yeah. So, of course, the biggest increase for the month was gasoline, which was up 18.3% for the month. That's month over month. So massive increase in the cost of gasoline makes perfect sense from what we saw. Also, some other big increases, though. Food at home was up 1.5% for the month. So that's quite considerable. Food overall was up 1%. And that was driven by increases in rice, ground beef, citrus fruits, and fresh vegetables. So, which were all up more than 2% in March. So, yeah, those are some staples that people buy on a week-by-week basis: beef, rice, and vegetables, right? So certainly consumers are feeling the pinch on some of these. And we can also compare inflation to wages, which is a good way because wages might be surging as well. So kind of
balances out.
Yeah, that's an important kind of thing to look at, how relatively your wage is changing to the cost of goods. But wages rose 5.6% from a year ago, which is a lot, but on a month-over-month basis, actually declined 0.8% in real terms. So once you're taking into account inflation, so your wage would have gone up, or on average, let's say, the wages went up, but once you take into account the extra cost of goods, it was actually down, which is not good. And that's typically what happens in an inflationary environment, which is why it can be so painful, and it can start to... It's kind of a really sneaky... It's like a sneaky tax. Because if taxes go up, you kind of know, you can kind of run the calculation and know what the impact is going to be. But it's difficult to see what the impact of inflation is because you're kind of buying things on a week by week basis. It's difficult to feel, it's not like all of a sudden you see prices are much higher. You're just paying a little bit more every time, and maybe you're noticing that your savings aren't going up as quickly as they previously were. So yeah.
It's interesting too, like when you get a annual performance review like at a job or something, it's like, man, what you almost don't want to go in there and say something like, well, come on, boss, like inflation's gone up 10%. Can I have a pay rise of 10% so that I'm just, earning the same amount effectively as what I was last year? But
yeah,
of course you can't, like, that's not what, it's not possible. So yeah, ouch. That's it. That's inflation.
There was
holy smokes, that was a big jump.
Yeah, and there was some good news. So
great.
Core inflation rose 6.5% year over year, which excludes energy and food costs, but only 0.3% for the month, which is slower than the 0.5% expected. So I was reading the CNBC article, and this economist said what I've read in pretty much every CNBC article every single month based on inflation, which is, this is an indication that we've reached the peak. So I obviously believe that guy 100%.
Yep.
So there you go. Inflation's peaked, guys. We know for certain it's peaked.
It's going down. Yeah. We're about to hit deflation.
Yeah.
Great.
No, but in that article, so they that was one point of view was, look at this, the month over month is slowing down, at least on the core inflation number. The kickback from another economist was that core inflation did slow down, but it was mostly driven by a 3.5% decline in used car prices while everything else was up a lot. So there you go. Yeah.
Yeah, true. Yeah, you got to weight things accordingly, don't you?
Yeah. And of course, the gasoline prices is probably one-off, although we really don't know what's going to happen with that in the future. But certainly it's a big shock that's made a big impact on this month in particular. So we'll just kind of, it'll probably end up being somewhat of an outlier, maybe. Yeah. I don't know.
Well, potentially, yeah. I mean, imagine if, I don't think this will probably be the case, but imagine if that kind of gasoline issue gets resolved and prices come back down, then it's just like, you could have like a blip and then it comes back down. Next month we could be like, inflation, it's all good now because gasoline prices are coming back down. Yeah.
I mean, that's what the Federal Reserve's banking on. They have to see deflation for the rest of they're expecting deflation for the next 9 months to hit their targets. So,
based on their own logic. There you go. Anyway, geez, brutal. Yeah. Brutal. Inflation. Ouch.
All right. Take us through what's going on with Musk, because we spoke about this a bit last week.
Yeah, so a bit of a recap if you weren't listening last week. So Elon Musk, he bought a 9.2% stake in Twitter. He paid about $2.9 billion for it, which made him the largest individual shareholder. I think you were talking about this last week. I don't think I was. Yeah. Or maybe I think you were. Which makes it, biggest individual shareholder, bigger than Jack Dorsey, which is kind of crazy.
Yeah.
But there you go. But what happened was he agreed that if he was offered a seat on the board, he wouldn't own more than 14.9% of the company. Yeah. And obviously, being on the board, that's pretty big perk. I mean, Elon is clearly buying in because he wants to have a say in what goes on at Twitter, because he's been talking on social media about how he wants to fix it up, essentially.
Yeah.
So, the kind of like board accepted him with open arms. It's like, cool, okay, he'll only own maximum 14.9%. And thus we'll keep our jobs, and he's not going to buy out our company and clean us all out. So it looked like that was going to go through. They announced that was going to happen. Elon Musk was going to join the board. I think it was announced on Tuesday, and then he was going to join the board officially on Saturday. And then on Saturday, Elon Musk notified the board that he would not be joining.
Uh-oh. So I guess now we kind of know that it was likely the board's idea for him to join the board. So rather than Musk, it seems now that instead of Musk acquiring a bunch of stock and then using that position to get on the board, it seems like he's been buying a lot of stock and the board's gone, we don't want him to get control of the company. So we're going to offer him a seat at the table and limit his ownership to 14.9% so that he can't acquire enough to kick out management. He can join the board, but he won't have the power, the voting power on the board
He's just one person on the board.
Yeah, he's just one out of, I don't know, what do they have, like 10 people on the board probably? It's a pretty big company.
Probably.
So, yeah, very, very interesting. Did you see what the CEO sent out to employees after this came out?
I think actually I've got it up here, the little message that he said.
Yeah.
It was like, we were going to plan this. It was all going to go through. And then Elon has now withdrawn.
Yeah.
But it's interesting. This kind of leads to two possible outcomes, I think. It either means that, and I want to hear your opinion, what's more likely, because I know which one I think is more likely. It either means that Elon Musk, he doesn't have the time to be on the board, and instead he wants to be a truly passive investor. I just want to own shares in the company and you guys do everything. Sorry, I just don't have the time to be on the board. Or he doesn't want to be limited to owning 14.9% of the company and he wants to leave the door open for him to gain more control in the company.
Yeah, that's really the only two options, because there's no circumstance in which he would, I would imagine, turn down a seat at the table unless, he didn't have the time or he had no interest in asserting any power of the company. But
which is clearly not the case.
Clearly not the case.
Look at his Twitter profile.
He's been, as we've spoken about, he's an avid critic of Twitter. So, I think it's very likely we'll continue to see him acquire stock. I think now that he's over the threshold, he has to report within 2 days. I believe
the 10% threshold.
Yeah. So, all right, I think it was 5% for passive. So
it's 5%. You have to report within
10 days. That was 10 days. That
one.
one.
10 days.
Yeah.
And I think once you tip over 10%, you have to report it very quickly.
Yeah.
I can't remember the exact
there
time.
are some
24, 48 hours, something like that.
Yeah, I think it might be 48 hours. So we'll see. We might get some, relatively quick news if he's continuing to acquire the stock. But something I didn't really think about is, Musk has a lot of power in the markets. And it's not necessarily the case that he needs to acquire 51%, let's say, to start making decisions. He has an army of people who would very likely go out and buy Twitter stock and maybe by proxy give him their vote. That's something that's completely something that's within his power, to get people to basically sign over their vote, but not giving him ownership of their shares, but giving him their vote. Meaning, if he has enough power to say, "Hey guys, I want to take control of this company. If there's any shareholders out there that want to give me their proxy vote, then we could very well see a lot of people, just individuals, take up positions in Twitter to do that, and it would be kind of this amazing event that I don't think we would have ever seen in the markets, which is only ever possible because of the internet, really, where individuals could potentially band together and cause some kind of hostile takeover, which would be kind of crazy to watch.
That would be insane.
So, yeah.
But even if, he's one of those characters where even if he didn't do anything like that, if he put forward a proposal or something, there's probably a fair chunk of Twitter shareholders already that would vote for his, vote in favor of his proposal, just because he's Elon Musk.
Yep.
He carries a lot of, the name carries a lot of weight. But honestly, I read something in this article that they were saying that he's their prediction was that he's likely going to buy a controlling stake and then try and force the company private, which would be interesting. And then he can just essentially just turn it into whatever he wants, which I would be very interested to see. And honestly, I guess not out of the realm of possibility. I mean, it's clear if you look at Elon's Twitter profile and what he's said about Twitter over the last little while, he's already acting like he owns the company. I mean, he's talking about, hey guys, you want an edit button? And he's saying, I can't. What were some of the other things that he said? I'm blanking already.
The other thing he said was just whether Twitter upholds free speech strongly enough.
Yep.
So, I mean, his position on that is super clear. Twitter's been very, very quite aggressive at who they suspend on the platform. They're quite liberal with it. So you would anticipate that if he got into some kind of control, that he would probably wind a significant amount of that back. So yeah, it would be. Yeah, it'd be. It's going to be very interesting to watch this space because it's. He's a funny character, Musk. And I just can't. There hasn't been a massive hostile takeover in a little while. So
no. I think he's been deleting some tweets.
Oh, really?
Potentially. I'm not sure. But yeah, he was going on these threads basically talking about how he's going to implement this change. And do you want to see this change? Do you want to do that? It's like, oh yeah, that's a good idea. We'll do that. So it's like he's already talking as though he owns the company. So I think essentially what he's saying is that actually one seat on the board is not enough for me. And I mean, the way I see it is that for how long now has Elon Musk been the top dog? What he says goes.
Yeah.
Elon Musk says do this, you do that. That's the way it is at SpaceX, the way it is at Tesla. He is the top dog. So I feel like Elon Musk being in this environment where he's the top dog, he would struggle to be on a board where he could suggest something and the other board members could be like, nah.
Yeah. And I mean,
I think that would just infuriate him, honestly.
Yeah, and that's probably what would have happened. There would have probably been very rare circumstances where he would have held some kind of swing vote power, where he could, get something done by siding with one half of the board and over an issue or whatever. In most circumstances, he probably would have ended up just being shot down. Thanks for the insights, Elon. Like the kid down at the end of the table.
And I mean, he's said things like he doesn't want Twitter to be focused on advertising revenue because it gives too much power to the advertisers on how Twitter should be. But I feel like if he said, hey guys, radical idea, I want us to stop advertising on Twitter, I feel like the whole board would say, thanks Elon, but nah.
Thanks, buddy.
We're going to keep advertising. It makes us money. We're happy with that.
Yeah. What features would they add to some kind of premium?
Yeah, I think it would just be it would be a premium subscription kind of model.
Yeah,
instead of an advertising model.
Yeah, like on as in like individual Twitter profiles could have some kind of premium side to their profile.
Yeah, I think that, with Twitter Blue, I think they're already trying to incorporate this, but I think Elon was, for example, talking about the edit button being available for 20 seconds if you have one of these premium profiles. Things like he's floated the idea of a pay for a check mark kind of thing, which in itself is a little bit like, well, that's going to be abused because, how many scammers are going to pay up for that check mark just to look more legit and troll people even more?
They could put they could charge for it and then you still have to verify. But that just gets you looked at, because the problem at the moment is there's so many people who should be verified, but they're either too small or there's just too many people to get that through. That's a problem on every platform because there's just so many people who need that check mark, but there's just too many that they can sort through. So, but yeah.
So I think there's a couple of monetization options. I think pay for check mark. Honestly, I think a lot of people would pay for a blue check mark. It's just that, but then again, maybe if everybody's got a blue check mark, then it loses its effect.
Yeah. Yeah, they could just charge a lot for it. Mate, charge
they could
10 grand or something.
10 grand a year.
10 grand a year.
Yeah, to have a blue check mark next to your name on Twitter.
Jesus.
Yeah. Anyway, so we'll see what happens. But I have a feeling, I could be wrong, but I have a feeling that Elon Musk is going to look to acquire a controlling stake in Twitter at some point in the future. Anyway,
there you go.
Where should we go next?
Yeah.
You want to talk about Berkshire Hathaway?
Yeah, they're still buying. They're still active in the markets, which is interesting to see, but not overly surprising. We've seen the broad market kind of come down quite a bit over the past couple months, and that obviously means on an individual basis, there's some businesses that are getting really cheap, and others that may be just coming down from overvalued to less overvalued. But Berkshire has been putting some big money to work. We spoke a couple of weeks ago about the acquisition they made of the insurance company Allegheny. Is that where we landed on?
I can't remember.
Allegheny. anyway, they acquired that company for $11.6 billion. So that was a massive acquisition. I think it was one of the biggest in 5 or 6 years or something. This week, continuing to put billions of dollars to work. So they've invested $4.6 billion into HP, which is HP is essentially, Hewlett-Packard was the original company that was founded in 1939. That's an old company. But that was the original company. And then...
Man, they were making laptops back then? Crazy.
Yeah. Wow, so ahead of the time.
So ahead of the time. That's great.
They were selling like laptop cases back then, but there was no laptops. Damn it.
Guys, you're going to want one of these one day, trust me.
This is 50 years too early. Oh dear. No. So so Hewlett-Packard was the business, and they had personal computer. Well, I don't know what they did back then, but over time they became essentially a computer business doing enterprise and personal computers. And then recently in 2015, they spun off kind of different parts of their business. So they split Hewlett-Packard into 2 components, as far as I'm aware. Maybe there was a third, but one was HP, which is this business, which was a personal computer and printer brand manufacturer, basically. And then they spun off the other part, which was the enterprise business. So the personal computer component of the Hewlett-Packard brand is what Berkshire invested in. They bought just under 121 million shares, buying 11% of the company. So big chunk of the company. It's what does that make the size of the business? About $50 billion or so overall. So the spun off part that they've invested in sells desktops, laptops, monitors, peripherals, and other home computer tech. So interesting acquisition. I mean, at their site, it's a big investment, but I guess it's just difficult for Berkshire to put a lot of money. Like even if we imagine, let's just assume HP is a really good investment, just for example purposes. How much cash does Berkshire have? 150 billion. This company is 50 billion. So they would have to buy the whole thing, and they would still have 2/3 of their cash sitting around. So that's the difficulty. Whereas almost anybody else, us for example, we're not going to we could invest our whole portfolio and we wouldn't get anywhere near a tiny percentage of the company making any impact on its share price or the management team or anything like that. So it's just a difficult situation for them to be in.
Do you reckon this was Buffett? It's probably big enough that it would be.
Yeah, well, look, honestly, who knows at this point?
True.
They could be giving more purchasing power to the new managers coming through, but it's difficult to say.
It's interesting.
Yeah,
that it's not what we would traditionally call Warren Buffett's circle of competence, a company like HP, which is a bit interesting. But I guess, didn't he make an investment in like IBM back in the day?
Yeah, and I mean Apple.
Like
so
Apple, yeah.
I mean it's on brand for those kinds of things, but definitely. Yeah, I mean, it's tech, which Buffett has always kind of quoted as being an area a bit more difficult for him. But I mean, on a financial basis, it looks very much like a Buffett company. Lots of free cash flow. I think $6 or $7 billion in free cash flow last year. And almost all of it is going to share repurchases and dividends. So they're not really reinvesting all that much back into the business. It's kind of a slow, steady grower. And it looks like they don't have to put, at least for the last few years, they haven't had to put much cash back into the business for it to see a little bit of growth. So they've got some good business there, delivering a lot of cash to shareholders. And at the moment, which is even after a bit of an increase after Buffett invested in it, it's trading at a 6 or a 7 price to earnings ratio. So very cheap compared to current earnings, delivering all that cash to shareholders. If there's some growth in the future, then that's the equation there.
Right. Well, that makes sense. And this is sounds a little bit more like what Buffett was saying about his investment in Apple, where back in the day he was saying like, I don't use an Apple iPhone. However, I am confident that I can see strong businesses and strong, financials or extremely favorable investment opportunities, even if he doesn't know every single product and all their product lines back to front.
Yeah.
So that gives me the sense that it's going to be kind of a similar investment in that sense.
Yeah.
That no, he probably doesn't use HP products. He doesn't use Apple products either. However, he can read annual reports and he can read them bloody well.
Yeah.
And I think he's probably just thought that this is a very, very strong investment opportunity, even though if he doesn't think that, because when I look at HP products, I'm like, yeah, sure, they make some good stuff, but I mean, they're not, people aren't going, oh, I want to buy the latest HP product,
No.
Oh, did you see that new printer they came out with? Oh my God, you got to get it. So
yeah, they've certainly not done as well as other like PC brands, for example. There's obviously Apple and a couple others that have done extremely well over the past decade. So that's kind of that situation. It is kind of crazy that Apple was at I think a 9 price to earnings ratio when Buffett was buying it, which is insane because
it is insane, isn't it?
While HP is cheaper, I can't imagine HP has the same levers that Apple did at the time to activate services and these other things that they've now cloud, for example, and these massive businesses they've generated that didn't exist in 2015.
Yep. Or have the ability to just jack prices.
Yeah, exactly. It was kind of insane because Buffett saw this, how much pricing power Apple had, because it was really after that time that we just saw every year $100 increase in the price of an iPhone, which was just off the chart. It was like $499, $599, $699, and now we're at like the top one is like $1,800 or something.
Yeah,
it's just ridiculous how much room they had to increase pricing, and that's something that Buffett is really good at. As he said, he's good at identifying or tracking consumer behavior. What things are really sticky products that consumers will buy regardless of how much they jack up the prices. So fascinating stuff, but there you go. Another big investment by Berkshire Hathaway. We'll see if they continue to pummel money into the markets. But
watch this space. So this just got reported. This is not a 13F filing thing, is it? This must have just been reported.
I believe this is because he bought more than 10%.
Oh,
of the
yeah,
company.
of course. Sorry.
So I think HP had to disclose this one. Yeah.
Yes. Yep. That makes sense. All right. Well,
on the flip side,
speaking of Buffett, if we now turn to Buffett's right-hand man and we can talk about Charlie Munger, he is always very fast, very quick to release 13F filing. Quarter ends, bang, Daily Journal, 13F is released. And the Daily Journal 13F was very interesting this quarter. It really doesn't change like at all. Like I think there's 5 stocks in there. And before he started buying Alibaba, I think there was like a 6 or 7 year gap of absolutely no activity. But of course, we know the story. He was buying last year, Q1, Q3, Q4 last year. He just bought. The share price went down, and he just continued sinking more and more money in. And then this quarter, he has sold 50% of his Alibaba shares. Shock horror. Actually, this one did catch me a little bit when I saw the headline. I was like, what? Are you serious? So we don't have any answers as to exactly why. We only have speculation. However, I think the internet or the value investing community on the internet, we've actually banded together, and I think we've figured it out before we actually have definitive answers. So I'll talk about it anyway. So from everything, for all the thinking that I've been doing, and also all of the Twitter posts and all that sort of stuff that I saw online, there's kind of 6 potential reasons why Charlie has done this. So the first one is there's a change in the fundamentals of the business and he's decided to start selling it. There's the potential that he's tax loss harvesting. He's down a lot on paper. Lock in a loss helps him out at tax time. There's the possibility that he's found something better. And because the Daily Journal doesn't have that huge chunk of cash sitting on the sidelines like Berkshire Hathaway, he's had to sell something to buy something. Then fourth, he's transferred from the ADRs across to the Hong Kong shares, 9988. The fifth reason is that potentially it actually wasn't Charlie, but it was the new CEO and chairman, because, of course, you were talking, a couple of weeks ago, how Charlie Munger stepped down from the position of chairman at the Daily Journal Corporation. And then the last one is that perhaps he was getting uncomfortable with the new CEO / chairman was getting uncomfortable with the margin debt that they were taking on to kind of fund this stock portfolio. Because I think I've written it down here. From Q3 to Q4, the margin debt rose from 32 million to 69 million. The only thing that happened was that he bought Alibaba. So maybe they've gone, you know what, margin debt, we'd probably be fine, but why take the risk? And we just don't want to do it. So they're kind of the 6 possible outcomes. Do you just straight off the bat have any thoughts? What ones you think maybe are more likely or less likely?
Yeah.
I'll talk through my kind of rationale as to where I get to.
Yeah, there's always so many different possible outcomes. I think I probably resonate most with either the removal of the margin debt, which he recently took on, right? Like, what did you just say, between Q3 and Q4? So either that, or he's maybe doing some kind of tax loss, and moving the money into either a different investment, or that's not US listed, or maybe the Hong Kong version of Alibaba. But I don't know. What do you think? What's been deduced?
I tend to agree with you. I think he's predominantly tax loss harvesting, and potentially deleveraging as well.
Yeah.
Because this is something that actually I just made a video on this. I put it out this morning, but something that I missed that somebody commented is that if you look at the number of shares he sold in Q1, it's the exact same amount if you add the purchases in Q1 and Q3 of last year.
Right.
So he bought 165,320, then plus 136,740 shares.
Yeah.
And that equals 302,060 shares, which is the exact number of shares he sold in Q1.
Right.
The exact number.
Okay. So that would make sense if he is doing some kind of tax harvesting, basically a first in, first out kind of.
So maybe, yeah, exactly. First in, first out. So what I'm thinking here is he wants to hold about 300,000 shares, right? So because he got an amazing opportunity to buy in Q4, yes, Q4, he's gone, you know what, let's buy 300,000 shares, which is what I want to own. And once he's done that, he's gone, you know what, now I can tax loss harvest. I can sell the other 300,000 shares and just lock in a loss and give myself the tax benefit immediately.
Yeah.
So that, or potentially deleveraging. Maybe he wanted to own, like, I don't actually know. This is all kind of speculation, but maybe he wanted to own 600,000 shares or somewhere thereabouts. And he's gone, you know what, actually, I just don't feel like owning that whole massive stack of shares is worth it. Let's instead just get rid of the margin debt, especially with, interest rates and all that's going on. And who knows, Alibaba could fall further, blah, 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 margin calls and whatnot. Not that I think that would particularly bother him. And I also think the other reason I think it's more these two is because I think there's problems with the other kind of rationales. I think if there were changing fundamentals and he wanted out, he just would have sold everything. Like, why would you just reduce 50%? Oh, I think the business has fundamentally changed 50%, so I'll just change 50% of my portfolio. I don't think he'd think like that.
Yeah.
I think if something changed, he'd just cut it.
Yeah.
Then the idea that he found something better, I think it's unlikely. Maybe he found something overseas, but there was nothing new on the 13F. There is the possibility that he transferred to Hong Kong shares, but again, I would say, why would he only transfer 50%? If he wants to get away from the potential delisting risk, which he doesn't even really get away from by going to 9988 because the share price would tank anyway.
Yeah.
But he still would have sold, or he would have transferred 100%. And then the other thing with the new chairman, was it the new chairman that decided maybe it was uncomfortable? I still think that's not correct because the company has said that Charlie is still staying on as a director, and the reason for that is he still wants to oversee the securities portfolio. So
Okay. Interesting.
I think that by process of elimination,
Yep.
we can kind of get to tax loss harvesting or potentially deleveraging a bit.
Yeah. Maybe the margin debt that he was using could have very just well been a very short-term thing to enable him to make the tax loss harvesting move. I mean, what was it, 37 million in increased margin debt, and he just sold about 30 million in stock. So maybe
that's a good
maybe
point.
He's going to sell 30 million in stock, pay down the 30 million in margin debt the new margin debt. So it could have just very well been a short-term use of debt, a tool, exactly. Which would make more sense. I would be a little bit. It would be strange for to see Munger have a lot of margin debt over a long period of time.
Especially when we know he's so against it.
Yeah, that seems like such a fundamental violation of both of their principles. That the markets are just extremely volatile. Who knows what Alibaba is going to do in the short term? I mean, we've seen it. Clearly, they've thought that there was a lot of value in Baba, many hundreds of dollars per share if they were buying at 200, 150, 100, even under 100. So clearly they think that there's a significant amount of value there, but the stock has done extremely poorly in the short term, and that's just what markets are like, which is why margin debt, which requires you to maybe add more collateral as the stock falls, can be very, very risky over time, especially in turbulent markets like we're seeing right now. So that would make sense to me if doing tax harvesting, get rid of the debt that he recently took on. And but very interesting that someone was able to find the exact amount of shares that he bought in Q1. And so did he buy any in Q2 of that year?
No, he didn't.
So okay. So that's
Q1, Q3, Q4.
Okay. There's 100% then that's a tax loss harvest because he's probably doing first in, first out. For tax purposes, you can kind of choose how you want to approach where your capital gains are set. But if he's doing first in, first out, then the sale he recently made would have meant he probably would have been capturing losses on Q1 and Q3. So that makes perfect sense. Yeah.
I think we figured it out, Hamish. I think.
Well, I don't think I didn't figure it out. I just you figured it out.
Collectively, with the help of the internet, I think speaking generally, the value investing community has figured it out.
Okay. Yeah.
But I 100%, when we're sitting in the lecture theatre or whatever it is, listening to the Berkshire Hathaway shareholder meeting, I 100% bet that he's going to get asked about that.
Of course, yeah. There's no doubt. We'll get some kind of color on all of these things that they've been doing recently. The insurance business they bought, I'm sure he'll probably speak about that in their statement about their new businesses. HP as well. We'll probably get some questions around that. It's gonna be a good time.
It's going to be great. Yeah. It's going to be cool. I'm looking forward to it. It's really coming up close now.
It's 2 weeks. I need to get organized.
2 weeks away.
I'm so unorganized.
Yeah, I'm not organized yet as well. I've just been here, there and everywhere lately. So I really need to get my skates on and get this all sorted.
Yeah. It's going to be very good.
We'll do that after the podcast. We need to, there's some things we need to go over.
Yeah.
We still need to book some accommodation. Anyway, we'll do that later.
Figure it out. All right.
Should we do some Q&A?
Yeah, we've got
I don't think we have that many Q&A questions this week.
No. I added, I brought one across, I think.
Okay.
But
so if just before we start, if you do have a Q&A question, just go over to the YouTube version of the podcast, find the most recent episode and just drop a comment. That's the way to ask a Q&A question. Or even, like I've said this before, it doesn't even have to be a Q&A question. If there's a topic you want us to discuss, a news story, really anything you like. If you've seen something and you're like, I'd like their take on it. Obviously not like, hey, what do you think about this stock? But yeah, anything that's happening in the news, anything like that. We're open to ideas. But anyway, into the Q&A section.
I'll ask you this one. Love the effort you guys put into the podcast every week, as I've been a long-time follower of both your channels. Well, appreciate it. Thank you for tuning in. It's not possible without anyone tuning in every week. So thank you.
That is true.
Thank you guys. Yeah, pretty much. So Brandon, I have a question for you. Do you hold Alibaba on the USD stock exchange or on the China stock exchange?
Right.
If so, which platform did you buy it on? Cheers. I don't think. Yeah. Wow.
Thanks for the question, first of all. I bought on the New York Stock Exchange and I used Stake.
Mm.
who I am no longer sponsored by, but that's a whole nother story. Very sad.
They're just
very sad. ASIC, they just don't want to let us get away with. We spoke about that already. But yeah, I bought on the New York Stock Exchange. Not going to lie, I found a little bit of comfort in the fact that the super investors were doing the same thing. However, in recent times, the risks around that have been dissipating. Like the one of the big delisting risk kind of theses was that China wasn't going to allow the accounting firms to be audited by the PCAOB, the accounting board, and now China's been telling these companies that, look, you need to get ready for having these companies, these accounting firms audit you, or having the PCAOB audit the accounting firms or whatever. So I think that overall, I mean, there was a risk there, but I think now the risk, it's not over because nothing's set in stone yet, but the risk is, I think, less than what it was.
Yeah, I think.
But yeah, that's what I did.
I think that came out last week or a couple of weeks ago, right? We didn't really talk about about that change, but yeah, I think the Chinese government made a number of changes over the past couple of weeks. It looks like somewhat in response to the stock market just being in free fall, so they kind of had to do something to bring some more confidence back into Chinese stocks. So. That was certainly big news for these kinds of businesses. So there you go. Yeah, not that the question was posed to me, but I also hold the New York Stock Exchange version of the company. Very small amount, but yeah.
Cool. All right. Should I ask you?
This one.
I'll ask you this one here. Hi guys, love the podcast and your own channels. Thank you very much. I have a question about competition. Do you assess the competition a company has to see if it can take a slice of the business? If so, how do you go about it? Do you do the same thorough process you did to the company that you're looking to invest in?
That's a really good question, actually. How do you go about thinking about competition? I think it's extremely valuable to do deep analysis on as many public companies that are competing against each other, even if they're not businesses that maybe they're businesses with too much debt, for example, and so you're not interested in taking risk on that aspect. But I think there is a lot of value in doing a deep analysis, learning how those businesses work, what advantages they might have, that sort of thing. I think there's a lot of value there, but I think there's kind of two key things. One is, of course, you do want to do that, but you also want to, of course, make sure that the businesses you're investing in have a sustainable advantage. So that usually means they'll probably already be quite established in the industry. They've got a track record of consistently attracting customers. And you need to, do they have some kind of protective layer around them? Do they have a networking effect or a powerful brand or some kind of patent or other intangible asset or a switching cost advantage? What's protecting them from other businesses taking market share, taking customers? And then something I really like to do is figure out what are the key kind of performance indicators or key business indicators that are really good measures of how well the business is doing in that particular industry, and comparing those to different businesses. So like, for example, if you're looking at streaming services, one of the most important indicators is retention or churn rate. So of the people who are subscribed on a month by month or a year by year basis, how many people are churning, how many people are leaving, how many people are staying, and comparing that to different streaming services gives you a very good look at how entertaining the platform is and how good the company is at retaining customers. Engagement on the platform, time spent on the platform might be another one as well. So that's just an example of how you can figure out from looking at lots of companies, analyzing, reading annual reports, you can figure out what metrics are really important for the business and compare them across different businesses in that industry.
Yeah. Industries do tend to consolidate towards a couple of KPIs, don't they? That they all tend to report, like social media's monthly or daily active users and that sort of thing. But I agree. I think it's very important to go about looking at the competition and look at the competition in the same way that you'd look at, the business that you're interested in. Maybe I wouldn't go into the whole valuation process and that sort of thing if I'm really not interested in this business. I'm just trying to learn about it because it's in that industry. But I definitely try and learn about more like what you're talking about, like where are the economic moats, where are the advantages in the industry, and learning about how other businesses in the industry go about it can give you an indication of whether the company you're interested in actually does have the advantage you think it does, or maybe it opens your eyes to realize that, hang on, every business in this industry does the exact same thing. I thought this had a moat, but actually they all do the same thing. Therefore, there's probably not a moat there.
Yeah.
But it just gives you, looking at the industry in general, just gives you so much context. Like if you just looked at Twitter on its own, and you didn't look at the social media industry or the competitors, you just looked at Twitter, maybe you come to the conclusion, you're like, oh, geez, all the big celebrities are on Twitter. I don't really know. The big celebrities aren't really on Facebook. Twitter seems great. Oh, what's it got? A couple of 100 million in active users. That sounds like a big number. That sounds pretty sick, doesn't it? And what do they do? How do they monetize it? Oh, I can see they make some money from what they do. And if you never look at Facebook or Meta, then you'd probably be like, oh, Twitter sounds great. And then you look at Meta and you're like, holy smokes, there's clearly a top dog in this industry. So
yeah,
it's very important to look at competitors.
Yeah, there's actually been a number of times I've started looking at one business and I've looked at competitors and I've just found a better business that I wanted. I found something better. So, cool. Like what you just described, I think there's a lot of value in going deep. And look, the more that you read about how different businesses operate in the same industry, you will just get a really good, the clarity of your understanding of the industry will be a lot better.
I think a good example of that is you in the restaurant industry.
Yes. Yeah.
I remember, I can't remember, what was the first company you were looking into in the restaurant industry?
I looked at the Cheesecake Factory
Something
very
like
early on. But yeah, and they're an okay business, but they weren't performing amazingly. And then I stumbled across Texas Roadhouse. But there's
that's right. Yeah,
there's quite a few different ways that even a simple business like a restaurant chain, there's so many different ways that they operate. They could be a franchise. I was recently looking into Domino's, which is a master franchise operation. So they franchise to another company, which then franchises to individuals, which is an interesting model. They can own the land, they can lease the land. Under the franchise model, they can collect a royalty on sales or on profit. They can sell food and equipment and maintenance to the franchise. There's so many different things that even in a simple business like the restaurant industry, you can go really, really deep. And I think the more different companies you look at, you'll just get an understanding of the ways different businesses operate and which ways work at scale and which ways kind of have upper limits and might not work as well.
I think that's exactly my point, what you just described there. If you just looked at one of those restaurant industries, you wouldn't have been able to just spit out exactly what you just spat out about all the different ways that they operate and that sort of thing. So it definitely works to look at the competition.
Yeah.
All right, cool.
All right. Should we
wrap it up?
Yeah, we'll wrap it up there. Thanks everyone for tuning in. As Brandon just mentioned, if you have questions, head over to the YouTube version. We're back. We should have mentioned this at the start, but we're back on video after a 1 week off. So
sorry, we were gonna do something cool, but it just didn't work out.
Yeah, but that's okay. So we're back on video now. Some more reason to head over to the YouTube version. Check us out. Look at our beautiful faces, and then you can leave your questions there as well. Thanks to Sharesight for sponsoring, as always. Sharesight.com/young investors. As I said, there's a free plan that's available, so go check it out if you haven't already. It's fantastic. Thanks, Brandon, for joining me, as always.
No worries, mate.
We'll be back next week. Thanks, everyone. See you later. Have a good weekend.
We were going to do video last week, but Hamish had 10 wasp bites on his face.
That's the truth.
And his head was like 3 times the size it normally is.
Yeah.
Your eyes were just like...
Yeah. I couldn't click the on button on my camera because my hand was just a big kind of puffy mess. So yeah.
You just had sting bites everywhere.
Yeah.
It was a mess. You're glad you didn't see him last week.
Yeah.
Oof.
Yeah.
He was one ugly guy.
The surgeon did a good job, I think, right?
He fixed you up real quick.
Yeah.
No, very good. Very good. All right. Bye, everyone.
See you later.